the Iranian conflict has had some more progress in a peace deal. It's not done deal yet, but we'll see how that goes and how that will impact mortgage interest rates. Hey, it's KP coming to you live from Newport Beach. It's Memorial Day. It's a little festive here earlier, but I got here late and just had a lot of stuff to do today, remembering the fallen and the reason we have this holiday weekend. And, I think something 1.2 million Americans, men and women, have given their life in battle. And of course, someone who did serve our country and has passed, we honor them today too, even if not fallen during active duty. So I know probably the last post you're going to see today, and that I'm trying to stay disciplined, although I missed Thursday night. This is my Monday night video. So our CEO and founder, Paul Rozo, and I were texting yesterday, and he said to make sure that whatever my next video is, which tomorrow night will be an internal video to PRMG, but tonight is here. Check out the moon. He said to say everyone in PRMG is trying to honor the fallen, and we wish those family members that have service members that have passed to honor them. And so that's it. It's about as much of a PRMG plug I'm going to get, but it's very cool when our CEO and founder, my partner Paul, wants to chime in on this video. He's a good man. Okay. We're at Balboa Bay Club on Newport Beach and just sneaking in a super late dinner here with our 4 feral cats. And I'm going to roam around here and get you some of the views. We'll check out at the end. My oldest daughter and son are playing basketball. If I can get back in. Anyway, so there's a lot going on this week. Obviously, speaking of freedom and servicemen and women trying to put it on the line for us, the Iranian conflict has had some more progress in a peace deal. It's not done deal yet, but we'll see how that goes and how that will impact mortgage interest rates. Oil has already kind of fallen a little bit, sniffing out the end. I mean, $91 a barrel, right now, up from, what was it? We're in the mid 60s, 60, 65. Before this conflict, might retrace back to 85, 80. We'll see. Be interesting how that looks. There was an Iranian drone attack on a nuclear reactor condenser in the UAE, and that was last week. And then today, there was the U.S. used some military force, and they said in defense of their troops. So don't know what that means. We'll watch the markets open in the morning. I mean, I'll be up between 6 and 6:30 West Coast time, watch the markets and see how it all goes down. And, that's just a daily thing. But the long-term trend is that everything must come to an end. And it seems like it's getting closer. So we'll see. The Abraham Accords are thrown in the mix. Who's going to jump in, with this peace deal? And most importantly, can we figure out a way to get through the nuclear uranium problem? Okay, back to the markets. A lot of talk all the time on here on LinkedIn about is the dollar dead? Are we broke? And all that kind of stuff. And we're not trending in the right direction. But I saw a pretty cool podcast this weekend. I don't watch a whole lot of TV and stuff unless it has to do with analysis on business and stocks and the flow of money. You'll start to see some weak auctions for bonds and bills and stuff, especially the long bonds, like the 20 and the 30-year. There was a 20-year that was average last week. And then we have all of our bill auctions this week. I think we have a 7 and a 5, a 5-year. Those are notes, excuse me. So, all right, my 2 older kids are not in the gym. There's a basketball gym here. So now I have no idea where they went. I told them it was closed, but whatever. Can't hate them for trying. Don't ask for the sale if you don't get the sale if you don't ask for it. Anyway, we'll watch the auctions, see how the flow of money works going forward. Spending a lot of money in this country, especially on, wars and, entitlement programs and all kinds of stuff. So it does impact interest rates. It'll be interesting to see what happens here if we can get a resolution to this conflict. And we'll keep an eye on that. Earnings season's largely over. There's some companies still reporting. NVIDIA reported last week, absolutely crushed it, and then the stock sold off. That is a market mechanic dynamic. So once all the call options, because everyone was betting on them to win, there's what's called market makers. It's kind of like broker dealers, except broker dealers in our business are honest, and they play it by the book and they're pretty transparent. Market makers for stock trading, a little different. They just try and there's a lot of bets on a stock going up. They'll take the other side and bring it all down, even if the earnings report is great. So I'm not a financial advisor, not responsible for your losses, only your profits. But earnings season is over, and we'll see. We have a new Fed chair. It'll be interesting to see how that goes down. I think we kind of know how it's going to go down, and it should take some time for that to work out, as will whatever inflation pressure we're feeling, from oil, energy, and all other impacts. And on that note, we get a PCE, personal consumption expenditure, later this week. That is the Fed's preferred measure of inflation, which will be the first one under Fed Chair Kevin Warsh. So we'll see how that goes down. And then of course, there's Fed speakers and all kinds of stuff. We have a Fed meeting coming up in just a few weeks. So be interesting to watch all that. Energy is a hot topic, right? Because you have all this data center build out, all this infrastructure, in last year, there were 49 rejections or, deferrals of energy plans in 2025. There have been 79 through the first 4 months and a week. So there's a little bit of a rejection. Like Maine is probably the most famous one. I think they passed a law so you can't build a data center in Maine because these data centers are about 4 to 6% of all energy consumption. I think by 2030, they will be 17% of all energy consumption in America. So that's a lot of stress on the grid, on our bills monthly. I've strongly considered putting in solar panels, as ugly as they are, just to lock in a rate. Because, who knows how it's going to go. But that's a big thing to watch over the coming months. So we'll keep an eye on that. And, other than that, it's, spring purchase seasons. This is kind of like one of the peak middle of spring purchase season moments where people are checking out their listings. So hopefully we got some good activity over the weekend. We'll see if there's any more activity that happens. If rates can come back down, that can bring maybe a little bit of a boost. People are going to pay the going rate, right? The numbers are up. Purchase season is up. There's more purchase business being done this year than last year. We had a refi boomlet at the beginning of the year. So all numbers are up, but all bets are off second half of the year, depending on what goes on with rates and inflation, after this conflict ends or doesn't. So we'll keep an eye on all that. And I'll have another video out later this week. Have a good one. Cheers. Hey, it's KP coming to you live from Costa Mesa. My third grade son, Luca, they just won 2-0 against Anderson, kind of a rival elementary school. And they are on their way to the playoffs tomorrow at 3:30 on the Pilot Cup. For those in Newport Mesa Unified School District or Orange County know, all these elementary schools square off 3rd through 6th grade. 3rd and 4th graders play together, and 5th and 6th graders with boys and girls. Lots of fun. And then flag football playoffs tomorrow. Anyway, enough of that stuff. Life's good. I'm trying to lock in. Done with work travel. A couple of sporadic trips here and there, but all the heavy stuff is done. I had a great mindset session with Steve Scanlon from Rewire, and shout out to his brother at Fairway who connected with me on LinkedIn. Hopefully you're going to get some nuggets out of my videos. We were talking about this 2 weeks ago when I had my video up. If you saw the 3-minute video with Kayla on her track meet, which they had district finals, and she won her 800 meter, and she ran a 6-minute mile. Wasn't quite good enough to win the finals, but she did post a 5:56 mile as a 13-year-old. So real honored to try and lock in with my kids here. School ends next Thursday. But my session with Steve was talking about mindset. I mentioned that on that video a couple weeks ago. Are we anchoring our mindset to external things? And I'm going to get into some data and some macro stuff that a lot of us do anchor to. I talk about macro. I've got some good nuggets here in a second. But like, does it control how we feel? Is it what we anchor ourselves to? Like, need rates to go down or else I'm unhappy, that kind of thing. In the last 2 weeks, rates were elevated. And so, it's probably reason to be distraught. It's understandable. But the daily activities setting up, potential refinance opportunities, grinding on finding purchase business is still out there. It's still spring purchase season, and purchase applications are up year over year. Purchase business is up year over year. Non-QM is growing. There's a lot going on that's good. And so now rates have taken a little reprieve. The 10-year Treasury has gone from, let's call it 468 at its peak in the last, call it 3-4 weeks. It's down, I think down to like 445. That's a good sign. So rates are improving, and when rates improve, obviously, more people can afford housing, and that's also better for us. So, whether you anchor to it or not externally, you have agency over your mindset and your thoughts. And so that was a good lesson today from Steve. Having said that, let's talk about some macro stuff. I contend that the bond market will front run and continue to get better, even if some of the news we're reading is not the greatest. So I'll give you an example. So PCE, the personal consumption expenditure, came out today. That's the Fed deflator, the Fed's preferred measure of inflation. Although it'll be interesting to hear Fed Chair Warsh in a couple weeks talk about it and how he's looking at trim mean, inflation, and just kind of looking at the grand and the macro. It'll be very interesting to see this regime change shift anything in the way the Fed thinks. Now, it may not internally, but he may externally at the podium. So it'll be very interesting. But inflation at the core number, which strips out energy and food, which is obviously more volatile, only rose 0.2%. That's not a big rise. It still, I believe, was 3.3% year over year. So it's way up above the 2% target. The headline number was obviously much higher, mostly due to energy. So when the headline number, you put energy back in. I mean, it's crazy. Like, gas prices are up. But everyone who is in this stuff knows that the cure for higher gas prices is higher gas prices. Here's some data that I had, I wrote down a couple weeks ago, and I just discovered it. I guess I kept forgetting about it. Walmart, for example, where people get a ton of gas, the largest grocer in America, huge outlet for gasoline, the lowest number of gallons per pump in years. So it's like less than 10 gallons per fill up or pump. So people are filling up for shorter travel. They're spending the money that they have, and they're making do. Spending on disposable income, was down. Income was flat. GDP was revised from 2 to, I think, 1.6%. So some of these things can be like bad data, but then the bond market can say, oh, hey, this Iranian conflict is ending or over or better, or the Strait of Hormuz is open. So we're going to look through that, and then we'll watch the 10-year Treasury come down and rates get better, even if everything you read is negative, negative, negative. So anyway, just keep grinding, right? Like, these opportunities will pop up. I love the MBS Highway team. They have the strike rate. Get all these conversations done ahead of time with your consumers, and, say, hey, when this rate hits, I'm going to lock you, and we are going to do this deal. Yes, yes, yes. So get all that out of the way. You could have been doing it the last 2 weeks, 2 months. And then when that rate hits, it doesn't take much. We're at 6.5% here recently on the 30-year fixed. The 10-year Treasury yield and 30-year fixed rate spread will continue to ease. That is as volatility calms down, and that would come naturally if the Strait opens. So this peace deal, again, I mean, this could be egg on my face tomorrow. Trump could reject the deal, and, we'll see the bond market shoot back up. But they're trying really hard. I thought they would just mercilessly, attack militarily, Iran and end this thing, and they're giving peace a chance. And as we've watched the Middle East all of our entire lives, peace in the Middle East is fleeting, and it takes a long time. And so this deal, whether it's, a peace deal coupled with the Abraham Accords, we've already seen the UAE leave OPEC. There's a lot of disruption. So these things don't happen overnight. Unfortunately, spring purchase season, is coming to an end. However, it's been healthy and steady. So a lot going on there and that stuff. And I think the data, even if it continues to be negative over the couple months, the bond market will front run a lot of where they think the direction is going. The trend was lower rates. And when we were at 6.25 or even under that on the 30-year fix, refi business was booming. So there are all these little boomlets that come, and it doesn't take much to get right back down that level. I mean, we're only at 6.5 with a 10-year Treasury coming down. So anyway, we'll keep an eye on that. SpaceX IPO is coming out. That's an $80 billion, maybe $75 billion flush of cash. So I wouldn't be surprised. I'm not a financial advisor. I'm not responsible for your losses on your profits. Wouldn't be surprised if all of these incredible tech names that have been running, high beta stocks, high PE stocks, some stocks don't even earn money. They're just running. If some of them get sold off, and a lot of retail investors and even institutional investors, but a bigger chunk of retail investors than normal for an IPO are selling positions that have been running to get into this IPO for SpaceX. Now, that IPO for SpaceX is interesting because the space economy is real. It's not a joke. It's been going. But once it goes IPO, then it will get put into the QQQ index. It'll get put into the SPY, the SPX index. These index funds, have to buy the stock if a $1.7 trillion valuation company, even if only 80 billion of it is public float. Remember, not all companies are public. We've discussed this before here and on the last word. We've discussed this before that, percentages of companies can be public, and just to tap the equity markets, the public markets to get money. So that will move money around, and money going from stocks and bonds. We could see some disruption there on the 10-year Treasury. But as Bill Bodnar and I discussed from Tabrasa on his LinkedIn post, the bond market, the 10-year yield is the true dot plot now. So let's keep it on everything. Have a good one. Have a wonderful weekend, and I'll get back to you on Monday. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.